So I actually just
really?
built a URL. I built like a fake website and Google imaged a bunch of packaging.
You know, you have the rush, the heat of the moment, you're working with team members, you get camaraderie, all that stuff, to business to an extent, but there's also like itch to go back. Anyways, do you see that translation into what you're currently building in terms of just like what you did there, and what you're doing now? Or
there's one right now, Esquire video for the Esquire Fragrance Award, right?
Meet Matt, the co-founder and CEO of Huron, a men's personal care brand dedicated to providing A+ personal care for guys everywhere. Matt went from D1 athlete to investment banking to CEO of a multi-million-dollar e-commerce company. Having experienced all the struggles of personal care himself growing up, Matt decided to take matters into his own hands by creating Huron. In this episode, we talk e-commerce strategy and growth, being a dad entrepreneur, the funny story of how Matt's company became the face of one of Shopify's most popular themes, and much, much more.
All right, welcome to episode 73 of New Money Talks.
Nice and easy.
Yeah. We got
Cool.
Matt Mullenax. Am I pronouncing that correctly?
You destroyed it.
Yeah.
Mullenax. All right. Well, so this guy's the founder and CEO of Use Huron, the best personal men's care brand in the world. He's a former D1 athlete, world-class businessman, prior investment banker. What don't you do?
Oh boy. That's a loaded question.
That's a loaded question, Kyle.
No, I mean, I started my career in finance, actually had a pit stop along the way at Bonobos. So I was actually the 5th hire at Bonobos way back in the day, in 2008, which was pretty wild. Did that for a few years, then got back into finance in a private equity capacity, ended up going to grad school out west at Stanford, and then started working on Huron kind of in the later stages there. And then we officially launched in 2019. So we've been at this for a few years.
Yeah, I think you're at year 5 or 6, something like that.
Yeah, officially it's like almost 5.
Okay.
But with most CPG brands, and quite frankly, whenever you're making a widget, like there is like a substantial amount of pre-launch time that goes into partner selection, iterating on the product, right? So we spend probably close to 18 months doing that full time before we actually push go.
And I'm curious myself too, because obviously you were in like more of a finance place before you did like D2C and e-commerce. What made you get into e-commerce, and also just like men's grooming and men's shampoos, conditioners? Because it's a very like, I don't want to say weird, but just a random place to end up from like finance stuff. I'm just curious, like what kind of made that happen? Yeah,
good question. So throughout my finance journey, I was always kind of in the broader consumer retail space. So I did consumer retail investment banking, then obviously spent time at Bonobos, then went to consumer retail focus growth equity fund. So I was always kind of in and around the broader landscape. And I think for me, what was compelling about the broader personal care and beauty space in particular was that it historically targeted the female consumer, right? So beauty brands, amazing margins, great businesses, amazing like repeat purchase behavior, and can scale pretty quickly. And at that time, kind of call it 2012 and 2014, when I was kind of like leading the charge, so to speak, for this private equity firm that I was working with, there just weren't that many options for guys, right? It was what you were getting at Walgreens or CVS, or maybe you get gifted Kiehl's for Christmas and you run through it, but then you don't go buy because you're not going to go spend $40 on body wash, right? So there's like this weird gray area in between of like no man's land. So I thought that was like, oh, that's really interesting from a business perspective. Like no one is kind of channeling this level of product quality, but bringing it down to this audience, right? So I was always like, that's interesting. And then on the more personal side of things, like I was just the kid that grew up with bad skin. So I was running from AAU basketball practice to this track meet to football practice, and just like skin took a beating. So I had acne from the time I was a preteen until 29 when I left for business school. I did Accutane twice. It sucked both times. I hated it. I actually had a boss in my finance job tell me, he's like, hey man, like we can't take you to any more management meetings until you fix this. I'm like, oh, sick. That's awesome.
Good.
Wow.
But in a weird way, we are doing something about that, which is cool.
Yeah.
And so I was in Chicago at the time, and I was living on Huron Street, which is where the name comes from.
Oh,
so for me, when I see the brand like 10,000 times all day, every day, it's like this extra little motivational tool that's like, I know what we're making. I know who we're making products for, or like, I know why we're fighting or why we're existing. So even when there's obviously ups and downs of startup sphere and early stages and whatnot, having a really good understanding of why you're on the mission that you're on is like so important. And for me, it's like very, very tangible. So
Definitely.
Yeah. Less businessy question, but I'm sure after having formulated all these products, there's like some key ingredients that you guys have researched that are like really bad in general, men's skincare products, but also like women's. Can you name a couple of those for the viewers that like just might not know anything about skincare ingredients?
Sure. And honestly, so I have a co-founder, whose name's also Matt, and Matt is truly a product and development guru. So he ran product development and corporate innovation at Estee Lauder for a number of years. So he was building products on behalf of the Tom Fords of the world and a bunch of different designers, developing their fine fragrances, was developing for Lab Series. So when it comes to like the creme de la creme of this category, he was kind of architecting the products behind the scenes. So we teamed up in early 18 and then ultimately launched 2019. But as we thought about kind of like our formulation philosophy, we wanted to make the best possible products that we could at a certain price point, but that used only the best ingredients that we had access to, right? So there are things like parabens, sulfates, silicones, aluminum. Aluminum is oftentimes in an antiperspirant. So if you were to go to your drugstore and buy a spray antiperspirant, that oftentimes is containing aluminum. What does aluminum do? It clogs your pores so you don't sweat. Well, it's like, in theory, that makes a ton of sense, but there are some dangers associated with that, right? So there's just a long list of anywhere from, it depends on what list you leverage, but probably like 50 to 75 different ingredients or chemicals that we stay away from because it doesn't meet Sephora clean standards or certain kind of like industry benchmarks that we've manufactured to well before other brands, especially in men's, have. But we wanted to go where we want to skate where the puck was going, not where it was at, right? So we wanted to be like ahead of the curve when it came to thinking about only using the best possible raw materials, the highest quality, but still trying to deliver a world-class product at an approachable price point.
And I'm curious because like you guys have dived deep into like the ingredients and like the mixtures of all these products. Like how much did this cost to start in a sense too? Because like obviously if you're doing a lot of like R&D and like really creating, because like sure you can just take shampoo off the shelf, throw a label on it and call it Huron. Sure. End of the day, but you guys didn't do that. You guys do have like proprietary formulations and a whole bunch of different really good ingredients. Like how much, say the first year, did you have to spend to kind of get to where you are,
Yeah, it was pretty substantial. And I think, what was interesting about Matt's background is we had access to world-class formulators and fragrance houses and whatnot that might otherwise not be accessible from an early stage startup that was just getting off the ground. But because of his background and experiences and Rolodex, quite frankly, we got some like unfair starting positions with some of these folks, which we're certainly grateful for. But it's a pretty heavy investment up front. So we ended up raising money kind of pre-launch just to work on product development. But even rewinding a little bit, before we actually got started with push and go on product development and thinking about, brand identity and all those things, actually in grad school, I built and launched a fake brand. So I actually built a URL. I built like a fake website and Google imaged a bunch of packaging and then started running paid media all across kind of traditional tier 2 markets to see if there would be any receptivity whatsoever. So we had some signal strength that there was certainly an interest in this category. If you could speak the right language, if the packaging looked the part, if the ingredients felt like they were of the quality that this guy expected, then there's actually a pretty sizable market. So I think there's oftentimes like a misnomer around entrepreneurship and like founders being super risk seeking. But I had a conversation earlier about this today. It's actually a bunch of stacked risk mitigating discussions that you have around like, what does success look like? If something goes wrong, where does it go wrong and why? Like you're constantly poking holes in things all day long to figure out not what is totally risk seeking, but conversely, like how can you protect your downside? So our version of kind of protecting the downside early on was just like, let's just launch a fake brand and see what happens. And we had a ton of success doing that, which gave us the confidence to ultimately pursue this full time.
And I'm sure like that success helps you raise money and everything too, because you're like, hey, look, this is what possibly could happen. We just need X amount of money to like make the product and scale it up and stuff like that.
Totally. We knew we had the demand in like a very kind of like narrow testing parameter, but one that at least existed. So it's like, hey, this is like somewhat a proof of concept that people are going to buy body wash for $16 in these markets. So we took that to your point, raise our initial kind of pre-seed, and then sprinted on again, like brand building, but also product development.
For sure.
How many core products do you guys have?
Oh boy, you're putting me on the spot. So 4 categories, right? Face, body, hair, fragrance. And then within each of those kind of categories, we have probably 3 or 4 products. But then within some of the products, we have different sizes, right? So like this is our, the real packaging. This is our jumbo conditioner, but we also make a 12-ounce conditioner, and we make a travel conditioner, right? So it's really like same product, but 3 different SKUs. So when you add up like total individual products, it's like 20, 25-ish. But we started with 3. We started with a body wash, a face wash, and a face moisturizer.
Was there like a methodology of releasing products? Like I know so many founders that they have those 3 main products. They're thinking about expanding, but they're like, I don't know when I should or how I should go about doing that.
Also, to add to Kyle's question, I've seen a lot of brands, they start coming out with new products, but their sales actually don't go up. It's just like their same customers just buying the different product, not like more product. You know what I mean? So like, how'd you kind of fight through that too? I'm very curious.
Yeah. Okay. So 2 questions. So when we launched with our initial kind of cohort of 3 products, the body wash, face moisturizer, there was a thought around getting into skincare, kind of like my backstory, right? And like reason for being for the brand. But we also wanted to create a very familiar product, right? Like not every guy is going to be like super into skincare, right? But like probably more so than not, guys have used body wash. So we're like, well, let's create kind of like a tried and true staple, and let's make it the best possible product we can make, so that if a guy's like, I'm not really ready for a face moisturizer yet, but I'll give him the body wash a shot. So if we can hook them and establish trust with the body wash, then maybe there's an opportunity to talk to him about the benefits of using a dedicated face wash or a face moisturizer or things like that. And from there, we created a pretty loyal audience of customers. And then we just ask them, what else do you want from us? Like, what else would you expect to see from us? We always kind of knew we wanted to build a little bit of like a destination of sorts, like a one-stop shop. We didn't just want to be skincare. We didn't just want to be body care, but kind of catering to, a guy shopping mentality, which we oftentimes call like laziness catering. It's like, hey, you find one brand you like, you buy everything from them, and then you just like, off you go. There's like not even a decision from there. So could we offer deo? Could we offer hair? And then eventually we got into fragrance in January of last year. And that's really a category that's kind of like created a new inflection point of growth for us, which has been super interesting. So
like cologne, you mean like cologne and stuff like that?
Yeah, exactly.
Interesting.
So we launched.
What made that work? I'm curious. You said that's a big inflection point.
So we launch customer surveys at least every quarter. And the recipient group is kind of dependent. At the end of every quarter, every new customer over the course of that quarter gets kind of like a similar survey around like, why did you buy from Huron? Like, what would you tell your friends about? Like, just basic kind of like psychographic questions. And the 2 reasons why people were hooked on Huron, or like what pushed them over the edge, was like the intrigue of the scent profile, because we have so many good reviews around scent. And then conversely, when we asked existing folks, like, why do you come back and buy from Huron? It's efficacy of product and scent. So from there, it's like, okay, people are really gravitating towards the fragrance profiles of these products. We should just make fragrance and see what happens. So we did that, and we launched our existing 2 scent profiles as a fragrance in January of last year, and they went nuts. And then we launched in January of this year a new fragrance, but for the first time launched as a fragrance first. Like, we don't have a body wash in that fragrance. We don't have a deo in that fragrance, and almost using fragrance kind of as like a litmus test to say, hey, depending on the success of this fragrance, we'll then figure out, should we be rolling this out into a body wash or a deo? And that's been like a really interesting experiment. But the fragrance that we launched a few weeks ago has absolutely taken off as well. A few weeks after launch, Esquire named it one of the top 8 colognes of 2024. Like, it just like, we're like, oh wow, this is cool.
For sure.
So fragrance for us has been a really, really interesting category. All to say, and I'll kind of put a bow on this, is like,
What's going on, New Money Talks fam? Just want to give a huge shout out to our sponsors over at MediaGlobe.io. MediaGlobe is an agency account provider for Facebook and TikTok agency accounts. They even provide Google agency accounts. So if you are a Facebook, TikTok, or Google marketer, you have probably experienced one of many issues like profile bans, ad account bans, ad rejections, ID verification disapprovals, spend limits, and the list goes on and on. And if you want the solution to all of those problems in one place, you have to check out MediaGlobe. With their agency accounts, you get unlimited spend access. You not only get access to unlimited spend accounts, you get exclusive support from the major advertising channels. You can receive whitelisted assets, meaning that they are almost bulletproof from getting disapproved, banned, rejected, or any of that fun stuff. And you get one-on-one support with their team of multi-8 and 9-figure advertisers. So again, whatever problem that you're facing with your paid media, whether it's for your e-commerce business, your lead generation business, your service-based business, if you're advertising on social media, you need to check these guys out today at MediaGlobe.io or visit the link in the description of this video and check them out there. Now let's get back into the podcast.
Obviously, I have my own backstory around like skin issues and whatnot, but the underlying like common thread of why we exist at Huron is around content. Is like, if we can empower you guys to like have a little bit more pep in your step as you're leaving the apartment every day to like go crush a podcast or have a great job interview or maybe a first date or like whatever it is. And if we can be like a little bit of that spark, that's a huge win for us.
For sure.
So that element of like small wins and stacking small wins and like confidence infusion is something that's really, really core to who we are.
Yeah. And I'm assuming you're like focusing on, say, like between age 20 to like high 30s. Like that's kind of like your demographic of like male you're going after. Cause like they're the ones who probably can pay for these type of things and will try these type of things and like stuff like that. You know, I'm just curious, right?
Yeah. That's right. It's a little older, maybe like 25 to 45, let's call it. But okay. It's kind of core millennial and then slightly up. But yeah, I mean, we get it's interesting because we obviously get customers from the entirety of the spectrum. I mean, there's guys who buy our stuff who are 80 and there's guys who are 14, right? But there's also guys who are very knowledgeable in the category. It's like, hey, I was only using Molten Brown and like these super high end brands, but saw that you guys continue to get all these PR hits, and I like read the label and I was like, oh wow, like this is a super clean label, like let me give this a shot, I love the product. So like helping guys kind of like find a better home from a price point perspective, but then also kind of educating guys around, you know, hey, I've only been like a CVS buyer and I just buy whatever and I don't really care, but maybe someone has been an influence on them, wife, girlfriend, partner, whomever, to say like, hey, you got to like start using better stuff. And I started doing some research and I came across Huron and like, I really enjoy the product. So there's kind of like multi-dimensional areas that we can pull from, which has been really, really fun as the brand has grown and evolved.
Definitely. Yeah.
What is your the distribution channels look like? Is it D2C and you guys have a couple retail locations as well, or?
D2C and Amazon actually really are only two distribution channels. So we launched on Amazon 2 weeks before COVID started. Amazon's a huge channel for us. You know, I think for a long time, people were kind of dismissive towards Amazon, right? Like, oh, that's so brand dilutive and da-da-da. But like millions and millions and millions and millions of people buy on Amazon every day, right? Like it's crazy. Yeah. It's kind of funny. One of our team members, he has a young daughter who loves watching Little Mermaid. And at one point in the movie, there's just this quote that says, I just want to be where the people are at. And like, that's how we think about our brand and positioning and distribution, right? It's just like, we want to be where these guys either know we're at or expect us to be.
No, I feel like there was a time on like D2C Twitter, for example, D2C Twitter, but like everyone was like, oh, if you're in D2C, like Amazon's going to like take your customers. You don't get the customer data, all this type of crap. But then when people plug in, it's like, whoa, I just added like 30% to my business like overnight. So it's like, you have to do it, you know? And I was also going to ask you too, because you've been around for, you said around 5 years now, the brand's been around for. What did kind of like the growth look like over time? Like, was this just like a straight up line? Was it a lot of up, down, like left? Like, I'm just curious. And like also what created those like spikes in a sense too. And if you're open to it, like where are you guys at right now? I'm just curious if you don't have to share if you don't want to, but I'm just curious too.
Yeah, we don't openly share that, but and just in terms of like the growth curve, I mean, it's been a pretty steady, consistent uphill climb. Like we haven't hit like, hey, we 9x'd month over month, but then we fell off,
For sure.
by an equal amount the next month. There's a lot of intentionality around efficiency of spend. So it's like, how do we think about acquiring customers in an efficient manner so that we can cross the chasm from being a super high growth brand to being a sustainable business, right? Because in my mind, the most attractive acquisition candidate for any type of strategic or financial buyer is a brand that doesn't need to be acquired, right? Because they spit off cash, they stand alone. Like they don't. If P&G doesn't come knocking, fine, because we make a ton of money
for sure.
Exactly.
Yeah.
So that's my kind of reading of like the changing of the tides, where early stage D2C bonobos, like all of these like kind of early companies, it was just grow, right? And you were raising venture funds to just support that high level top line growth number, but like no one really cared what was happening from like a cash burn perspective or a profitability perspective. The market is in a complete 180.
So I'm curious, how do you control that though? Because like I'm assuming a lot of traffic comes from like Facebook, Meta, Instagram, all type of stuff too. Like how do you, like you say, you don't want to be kind of you don't want to overdo spend because like to acquire customers. But if Facebook keeps going up, like how do you kind of control that and like limit that in a sense by keep growing at the same time? So like what do you guys really focus on for that type of thing?
Yeah, good question. I mean, over time though, we use ROAS more so than CAC is kind of like a North Star from an efficiency figure, but ROAS has increased and CAC has gone down for us over time, actually, because we've invested in better creative. We like found little pockets of opportunities. And like, once you see these gleams of light, whether it's creative or structure, like you just have to pivot and sprint at that and dissect, like, why is this working? And then how quickly, rather than resting on your laurels, but like, how quickly can you dissect that asset and figure out how to make a 2% improvement to it and like relaunch it in a new campaign, right? So it's constantly like a race to figure out like how we can one up ourselves. Definitely. And I think that has driven a lot of value for us. But because like there's a lot of pricing discrepancy across our assortment, right? Our cologne or our EDP is $60, but you can get a body wash for $16, right? So like that CAC ROAS kind of metric system, like those look way different on those two products.
For sure.
Right. So that's why we shifted about a year and a half ago to only looking at ROAS, but that gives us a much better system to think about how do we pay back in a certain period of time, which is something we're
that's true because you have a wide variety of products, obviously. So depending on like which one you're focused on, the math is different, obviously.
Yeah, you can absorb a slightly higher CPA in a $60 product than you can on a $16 product.
For sure.
Right.
For sure.
So, but yeah, we do a lot of kind of like analytical work around here's what we have to have from a day zero ROAS perspective. What do we expect is the 15, 30, 45, 60 day lift based on owned comps? So what do we do on the email side? What do we do on the SMS side? What in, direct mail, whatever, to make sure that we're paying back in a time period.
Have you guys used
outlined.
direct mail before? I'm curious, like a Postpilot and everything. You've used it. Mm-hmm. We're trying to get Postpilot to sponsor this, so that's why I just do that out there. Yeah. So
awesome.
Kyle,
no, it's but yeah, I mean, I think this, regardless of the industry, this is a way more analytical exercise than I think people give it credit to, which is for you to be like a sustainable standalone business, like you have to know exactly when your payback periods are for you to be, kind of like operating at net zero or better, like what your ROAS floor has to be. How are you merchandising? Like, how can you drive up AOB? What are margin expansion opportunities? Like at this stage, if you're a CEO, you kind of also have to be the CFO, whether you like it or not. So it's constantly running through these exercises to make sure that we're carving out a really efficient yet scalable path for us to be around for 5 more years, 10 more years, 15 more years, whatever it is.
Funny enough, your investment banking background probably helps a lot with that too.
Totally.
Yeah.
Now ask me to design a website and I'll be the worst one on planet Earth to do that.
Makes sense.
But if we think about like, some of the nitty gritty stuff, yeah, that's more my cup of tea.
Yeah, I got 2 quick questions. What does your like spend distribution look like across different media channels like Facebook, TikTok, Google, whatever? And then of those channels, how often are you split testing just like product spend, like to the product page versus collections page or homepage, out of curiosity?
All right. Good question. So From a allocation of spend perspective, we spend the lion's share across Meta and Amazon, actually. We do spend on Google, but it's more so brand stuff. It's less like long tail or whatnot. Meta, very efficient for us. Amazon, very, very efficient for us. So that's where we kind of keep the majority of our spend. I like to say, like, we should be focused on focus, right? Like, let's key in on the things that are truly moving the needle and like go all in on those things. And for us, there's still a lot of opportunities on Meta and there's a ton on Amazon. So like, that's kind of like where our primary focus is today. And then from
TikTok of the world?
Like a little bit dabbled. I mean, obviously like Shops is like kind of the cool kid in town right now. We haven't dabbled as much. It's kind of on the radar for us, but I mean, we're only a team of 5. So it also becomes like a resource game, right? Where it's like, well, if this person's doing this, then they're not doing that. And we have to make sure that if we are going to test in a very light way, that we aren't taking away from the success we're seeing elsewhere. What I do like about TikTok though is it's such the wild, wild west. There is a lot of ARB opportunity, I think, in a way that maybe Facebook had 8 years ago, right? Like when you talk about and hear about all these amazing founders and entrepreneurs that built and sold businesses from 2012 to 2016, rarely the thing that gets talked about is they were acquiring customers for $5. It's like, well, you know, you can be a really good, I'm not taking anything away from their operational prowess, but you can be a really good leader, you can be a really, really good operator. But if you're acquiring someone and, you know, and selling Dio for $14 and spending $4 to acquire them, like you don't have to be a genius to scale that business.
Yeah.
So I think for us, in a lot of in a lot of brands today, it's like, well, what are those other opportunities, right? Like that doesn't exist on Meta anymore. So, you know, talking out of both sides of my mouth a little bit, like, yes, focus on focus, but we do earmark like a little bit of time, energy, resource spend to think about like, can we dabble in here? Like, can we lightly test this to see if we do get signal strength? And if so, then we should sprint at it. But we aren't going to like completely course correct away from something that's working just because everyone's talking about how awesome TikTok Shops is.
Yeah, for sure. And products versus collection pages versus home pages.
Yeah. A few things. We have a ton of landing pages. We build a lot of landing pages. What works really, really well for us is certain landing pages, but also pushing to PDPs, quite honestly. Like we've ripped apart and rebuilt our site so many times now that it truly is just like a conversion engine. Like it's fast. You get to know everything that you need to, like, guys don't want to read 7 paragraphs on what body wash is, right? It's like, you get it. It's like, hey, it smells good. There's a ton of reviews and there's a ton of 5-star ratings. Like, which scent do you want? And let's get it out to you like today, right? So it's like really speed across the finish line. The other page that we drive a decent amount of traffic to is our BYO page, or BYOB, Build Your Own Bundle, which we developed almost 2 years ago at this point. It's hilarious because like so many brands have just like one for one ripped it off, but like, hey, great, more power to them.
Did you guys build it? Or is that an app that you guys use for that?
No, we built it.
Oh, wow. You invested money and time into building that.
Yeah, it was really important for us because I mean, we, you know, like let's say Kyle wants to buy the shower kit, but like is not a conditioner user, like not your thing. Like, so you're not going to buy a kit where you don't use a third of the products. No. So rather than trying to push and guess like what kit is like best fit for you, we can achieve that same AOV lift by pushing people to BYOB, gamifying the experience to some extent, like buy more, save more, right? Yeah. And then all of a sudden, like, we've just doubled our on-site AOV because you just unlocked a bunch of free stuff that you're super jazzed about. And that's great for us because now you have broader assortment to our assortment. And we know you're going to like something that you just bought. So it's kind of like a win-win-win.
I was gonna ask a question. I know you probably get asked it a ton, but you were a D1 athlete and there's a level of competitive in that I do think translates to business. However, I was a D1 athlete too, and I itch every day to go back to the moment where like I'm on the track, I'm on the field, I'm on the court, and you have the rush, the heat of the moment. You're working with team members, you get camaraderie, all that stuff. It translates to business to an extent, but there's also like itch to go back. Anyways, do you see that translation into what you're currently building in terms of just like what you did there, and what you're doing now, or do you not really think about it that much?
I mean, I think the outputs are different, obviously, right? Like you're not watching film and you're not, doing some of the things you would as an athlete. But I think the underlying passion to win, like, never really leaves you, right? And there's that uh, commitment to excellence and doing things, above and beyond. I like to tell people, like, I don't have a chip on my shoulder. I have like a Costco sized bag of Doritos. Like, for the entirety of my athletic career, like 2 inches too small, like a tenth too slow in the 40, like da da da. And like, that's just like snowballed over time. And like, I love reading about, oh, like this brand just launched, or like The Rock just announced his like men's care company today. I'm like, good luck, pal. Like, good luck. Like, now you're in the pool with everyone else, right? So that stuff like gets me fired up. But I think that's like a winning thing. That's less of like, how does this translate to the on-field stuff? That's not as apparent. But I think that competitive spirit, fire, whatnot, like never really leaves you from DNA.
It's funny you say this though, because like I do think that the industry is actually, like, the niche is actually probably really hard to win in. I'm curious why you think it's hard to win in the niche, like the men's grooming niche. Like, you would think it would be a good niche because like there's not that many as, like, for example, like beauty, like women's beauty brands, but also like, even like you said yourself, like good luck, The Rock. Like, well, why do you say that? Like why is this niche hard to play in?
Because I think the consumer is getting increasingly savvier over time, right? Like, when influencer was super hot to try a few years ago, like, you just give someone a bottle, whatever, and all of a sudden that's like flying off the digital shelf, right? Now you get served an influencer ads, like, how quickly can I scroll past this ad because I want nothing to do with whatever this guy's pushing today, because yesterday it was something different, right? That's so fair. I think there's, does influencer and UGC like still hold some weight? Like, of course, but probably not to the extent that it did even just a few years ago. Secondly, I think people want founder product market fit, right? Like, why is The Rock getting into skincare? Like, what are his ties? I've never heard anything about that. Have you? Like,
yeah.
So now, like, what are you in it because the margins are great, or because you can leverage your social platform and sell a lot of product? The latter's probably true, but at some point, you get to, and this was always my thing with influencer led brands in general. One of the biggest reasons why, since the beginning of time, private equity firms would not invest in brands that are founder led is this concept of key man risk, right? If The Rock gets hit by a bus tomorrow, like, what happens to that brand? Who's pushing out social media campaigns to nobody? So like, if this person goes away, what happens to the brand? Does it crumble? I don't know, maybe. So this whole element of like key man or key person risk, like, is absolutely what influencer led brands are susceptible to, right? So they went from being like run away from to like, oh my God, like, we should only be investing in influence. I'm like, this is ridiculous. So anyways, that's my own friction point. I think in men's, what's been interesting, and this kind of goes along the route with kind of a more educated consumer and a savvier consumer, is I think a lot of people have just written off guys as like, they don't care about this category. And I think that's rapidly changing, right? It's like, maybe a few years ago it was cool. Like, oh, I don't like wash my face. Oh, I just use like hand soap. Like no one showers with hands. Like, that's ridiculous. And I think that like kind of like funny tongue in cheek approach of like leveraging that is kind of dead and gone, right? Like, oh, I just wear the same shirt like 4 days in a row. Like, people would be like, why? Like, you don't have to do that. That's weird. Yeah. So I think people are quickly kind of emerging from that rut of like, guys don't care, back to like, holy cow, this is a wildly untapped category. And if you can be the right brand that is truly building a business that brings people back into the fold because the products are really good, because they speak the right language, and because they have a relatable, approachable story, then I think you have a really compelling argument for, why you could be a next 100 million, if not $1 billion brand.
Definitely. I another question for you. In the whole Shopify ecosystem, I'm sure you know this, but how in the world are you guys as one of the like, Huron is one of the free, what's it called, themes on the Shopify. How'd you guys do that? Like,
Oh,
did you know you were gonna do that? Like, literally, Huron's there as one of them. I think it's called Dawn. It might be Dawn. I don't know which one it is, but it's one of them. How'd that happen?
Yeah.
Like, did you even know about that?
No, we did. They released new themes like maybe like 3 years ago. And we had contacted them about like wanting to make some personalizations or customizations to it. And we made some like light touch kind of customization element. And they're like, great, can we show this as kind of like the new thing? We're like, yeah, of course. So that was we have an interesting relationship with Shopify. So they sent a crew to New York about a year and a half ago. They're like, hey, we're coming to New York with some content team members. We're doing like a homepage refresh and we'd love to take some shots at Huron HQ. Like, yeah, amazing. What was supposed to be like an hour shoot was like a 5-hour shoot. And I was like, not very happy because they're like asking everyone like, so like, what are you working on? I'm like, we just take some pictures and like, please leave. But then fast forward to maybe it was like October of this year, like watching Monday Night Football randomly. And they just made all of those assets into a commercial and like they were running it on Monday Night Football. I'm like, that's our office. And that's me. Like that's didn't exactly how I'd think I'd be appearing on Monday Night Football when I was like a teenager, but I'll take it. So it was just like really, I was like, this is awesome. So little did we know that, that photo shoot investment would certainly pay off.
For sure. Yeah, no, I've seen that like many times. And I'm like, I'm happy we hopped on this one. I wanted to ask them like, how the hell did you figure that one out? Or like they just did it themselves, but obviously this story makes sense, Dude,
yeah. Did it themselves. I was literally sitting with my wife watching him. I was like, is that us?
That's
it was hilarious.
Yeah. No, I think remind me if I'm correct. I think ShipStation also runs ads with Beard Brand. They use Beard Brand a lot in their ads. So it's like kind of similar where it's like they found a brand that like looks really nice aesthetically and like is really big in the ecosystem and they just kind of used it for their marketing campamping. And I guess you I'm sure Huron benefits from that too though. Like people definitely see that and they're like, oh, that's what I have in my in my shower, Yeah, that's awesome.
Yeah, of course. I mean, we got a ton of hits the next day. We're just like, saw you guys on Monday Night Football. Or, I mean, even after that commercial ran, I was like, I need to log on and see what's happening to like web traffic. And it was like, I was like, okay, all right, let's keep running the commercial.
That's nuts. Sorry, Kyle, go.
I was just going to say, you're a new dad, right? So, and with all due respect, you don't look like a dad in a good way, right? So like, what are you doing to stay fit, to not put on that extra, to not use that extra, put on that extra 30 pounds that you usually do when when you're co-parenting?
Yeah. So our guy's 18 months old. His name's Mac. He's the man. I think the biggest thing for me is like, and this is like the athlete way down in there is I just have to do something every day. I have to. And if that means that, I sacrifice an hour of sleep to start the morning, but I get out and go for a 45-minute run, like that's what keeps me sane, quite frankly. So like I have to do something in the mornings or else I'm miserable to be around all day. So I'm just like too competitive with myself, like not to do something. It's really easy to like just be like, I'll do it tomorrow, right? But that's just not kind of how I'm wired. I think the biggest thing is, especially going into kind of fatherhood, is like truly carving out time for yourself and like for my wife and herself to like, hey, you should just go out and like go do something for a half hour. Like I'll watch Mac or vice versa. Cause like you just need that time to like decompress a bit. And for me, I just find a ton of mental clarity going on runs, trying to get a quick lift in. I did CrossFit for a number of years. So just trying to get something that, clears my head more than anything, because I truly believe that physical health is mental health as well for me.
For sure.
John, you were saying something?
No, yeah. There's a lag on this freaking Riverside thing, so it is what it is. No, I was curious too, because like you're very competitive, and obviously like the whole ecosystem of like D2C has become more and more competitive and stuff like that too. Like as the brand gets older and older and older type of thing, which like means like it's leaving that startup phase into the more mature phase in a sense. How do you guys stay like competitive across the whole landscape of just like other D2C brands? Because obviously, as we've seen, like these CPMs keep going higher and higher and higher and higher. It's harder to like grow and everything. Like, what are you doing as a founder, as like a leader, to try to like keep the brand growing? You know what I mean? Because I feel like a lot of brands are stuck probably in a weird place right now, probably on year like 2, year 3, and it's tough. Like it's not easy. You've gotten to like year 5, year 6. Like what are some of those things that can help a founder push to that next level and kind of stick with it and come out the other side on top?
Yeah, it's a great question. I mean, I think for me, one thing that's been really helpful over the years is just developing a network, quite honestly. I've found whether it's friends in apparel or food and bev, like we're all kind of fighting the same fight. We're all facing very similar headwinds. So just the knowledge sharing that happens across category has been really, really helpful. Like I have a standing coffee with a buddy once a month who runs like a beverage brand, right? So it's like, oh, what's happening on Facebook for you? Like here's some content that's working for us. Like just note sharing and trading, because more often than not, if Facebook's not working for you, probably not working for other people too, right? So it's like, but if maybe if something is working for them, like he's in one of my Slack channels, like I usually ping him, I'll just send him the ad. He'll be like, hey, I just made this green screen. It's like absolutely crushing. Like you should try something like this for XYZ. So I think not feeling like you're at it alone.
Yeah. Quick, when did you realize like Facebook was the most important thing in all this? Like, because it not like one of the most important things. I feel like early on, people are like, oh, I want to do this, and this, but people forget like sales cures all in a sense. And obviously, if the sales channel is like Meta and Amazon, like how long did it take you to kind of figure that out? You're like, well, yeah, like creative and product are really the two things that matter. Like. At what point did you realize that?
I don't know if I ever didn't appreciate or realize that like Facebook was ultimately the volume driver here. Where I didn't have as strong of a grasp is what is Huron's kind of point of difference and where do we feel like we see the most upside in terms of the content and what we talk about. So for us right now, like if you go into ads library, we're doing a ton where I'm just doing green screen videos and like walking people through things, because kind of doubling back to
what's a green screen video?
Yeah, so green screen is like maybe there's like a screen recording in the background or a video, and I'm just like on top, like talking people through like what's happening, or like there's one right now where I'm just kind of talking about our new fragrance with the Esquire video or the Esquire Fragrance Award, right? And I think that's a good example of kind of that founder product market fit, right? It's like, this is why we started this. This is why we launched fragrance. Here's a little bit about this fragrance. When we were building this fragrance, here's what we were thinking about. People like to have that like inside baseball, right? They like to know like what's the step below that I can't read on the website, or like, I just have this hunch that so many people, our age, older, younger, what have you, they want to be founders at some point, but most in life won't, right? They're too risk averse. It's just not financially in the cards maybe, or, family reasons, or a litany of reasons why they ultimately will never take the plunge. If you can offer those people some insights, like behind the curtains, like, hey, here's what's happening. Here are the struggles that we're facing, but like, here's what we thought about before we launched the fragrance. People really appreciate that. And I feel like that's part of true brand building that oftentimes gets swept under the rug in a very DR heavy world, right? It's like, oh, was the CTA, learn more or get started? Like, who cares? Like, tell a story and tell people why you exist and like why you actually have a soul, but you're not just another website that has fun CRO or like a cool header video. It's like, no, there's actually real people behind the site building really cool things. Just let them see that.
Because also, like in reality, all these brands, like even like you said, Kiehl's, for example. Sorry to put them in the spotlight, but they have been around for how many years now? Who knows how many years, right? And the reason they have
130.
130, yeah.
Seriously.
So they built the brand. Like literally, that's like they really built the brand. People know them, whether like they know the founder or not. Like they have some type of like emotional connection to that name or something, right? So you're trying to do that the same way, and your distribution channel is Meta and Amazon. So like that makes a lot of sense. People don't think about it like that. They always think of like direct response. How do I get the fastest click to the shop now button and have someone check out? But if you do this ad piece, you can last for 6 years and not die out in like 18 months. It's like that type of thing for sure.
Yeah. And I think another piece of the equation, which again, oftentimes doesn't get talked about as much because it's not as sexy or in vogue, is like true product quality, right? Like you can smoke and mirror someone into buying something like through some ad or whatnot, but if your product sucks, they're not coming back at all. Right.
Sure.
So cool, have a 20x first order ROAS, but if you're selling a bunch of drop ship stuff, like that's a one and done customer. So for us, like we thought about the finish line is truly the starting point for most of our customer base in terms of like truly building a relationship with this customer, which sounds like cliche, like, but like truly like that's what we wanted to construct, which is with a finish line first mentality. It's how do you think about catering to this consumer so that you have them for the next 10 years? Because in this category, that's not that crazy, right? It's like, I don't want to buy Old Spice or Dove anymore, and I don't want to buy Kiehl's. What are my options? Not many. So can we fill that void and create that lasting relationship with this customer?
And then also like their kids could use it too. So it's like after 10 years, they're giving it to their kids, you know, it makes a lot of sense. Yeah, for sure. Becomes a household name. Yeah. Kyle, what do you got, Kyle?
I was gonna ask. There's a lot of brands that are subscription based, and they have a hard time making that decision of, you know, how much they're willing to lose before, you know, they call it quits in terms of CPA or return on ad spend. I guess how do you guys generally forecast that, especially with two different core channels, like you have Shopify and Amazon? So I'm sure there's a lot of analytics that go on behind the scenes for calculating, you know, lifetime value and free customer frequency and all that stuff. But I guess high level overview, what would you recommend to a founder that like they're sitting on some cash and capital, but they're obviously trying to make money with this thing, right? Like, what do you recommend they look for in terms of CPA, ROAS, et cetera, in terms of like first purchase profitability or not profitability?
Yeah, you really have to know your numbers. And before you even like diving into subscription, I mean, calculating that true like day zero ROAS threshold. So what is your fully loaded gross margin from net of Shopify fees, net of fulfillment fees, net of the tape that you're using to close the box, net of like what you're paying UPS, like all of the things, one divided by that percentage, like that's what you got to hit to be a day zero break even company. If you are in the camp of, you know, we are going to be a subscription only business, that's fine. But that ROAS number is going to increase or decrease, rather. Like you're just not going to hit that number. Like once you kind of constrain someone into the subscription only funnel, yes, there's massive LTV upside for sure, but getting them becomes increasingly more difficult, right? So it just becomes, a hot potato exercise of how much do we really care about subscription? How much do we want to force that onto the base? And then last, which is oftentimes difficult in a lot of categories to figure out, probably outside of supplements, is what is the throughput, right? Like you guys, maybe you're trainers at Equinox and you shower 3 times a day, but I work at Bain and I travel 5 days a week. Like those two consumers shouldn't get the same messaging around like, are you running out? Because the answer for me is like, absolutely not, cancel, because now you're bugging me. But maybe I missed your guys' replenishment window. Like subscription is tough in our category to figure out. So,
because everyone's using soap at a different level in a sense, right? That's what you're saying. Yeah,
totally. And like we've done like some fun things to help like guide guys in the right direction. So on most of our bottles, you can't see, but all these. So this says quarter size and massage. On our body wash, it says quarter size and lather, because our products are super concentrated. So you don't need a ton of it to actually get like a really good end use experience. So again, like that's us being like slightly more helpful. Be like, yo, like don't use too much. Like you don't need that much. But thinking about like, what is that usage rate? What is that throughput rate? Because whatever you guess, it's probably going to be wrong. So then you can go one of two worlds. One, you can go to like very business minded and be like, all right, we're going to set this for auto replenish every 3 days and try and maximize like the dollar value. But then the number one reason why people churn from subscription, I have too much product, right? Like it's like, I have 4 bottles. I don't need any more of this. So then do you artificially make it longer, which is, hey, this bottle takes on average 73 days to get through, but we're just going to set it to 90. So we don't make you mad. And if you run out ahead of time, you're like, oh, like my subscription doesn't hit for a few weeks, but like, I love this stuff. I'm just going to go back and buy it on my own. And then I'll take the subscription when it re-ups anyway. So there's like a bunch of different thought exercises to really go through when you are thinking about cattle prodding a subscription program. but it's a lot more time consuming and what am I trying to say? There's a lot more thought required than simply saying, okay, we're going to add a subscription option to the PDP and then just default to subscription. And all of a sudden we're going to have so much ARR. Like that's not how it works.
For sure.
That's how everybody talks in this space.
Yeah. I'm curious too, like for all these analytics and stuff, are you guys using like a triple whale type of thing to like keep track of all this? Like
we
Excel?
use,
what do you guys use?
We use, are you familiar with Peel?
Peel.
So we use Peel for a lot of like retention related stuff. And then most of the stuff we just use Excel.
Interesting. So literally just like back to the basics Excel.
Because I feel like if I'm running the analysis, like I've been doing this long enough, like I have a high degree of conviction it's going to be right. So we'll use Peel for a lot of the high level stuff that we can drop into the models that we've already built, but a lot of the stuff we're running the numbers on our own.
For sure. And like how often are you looking at numbers, like in a sense? Is this like a daily thing or weekly thing? All the time. Yeah.
It's the first thing I do when I get up is I update all of our dashboards from the day before.
Oh wow. Okay. So you guys have a full dashboard.
I like to go in platform so I can see if there's any wonkiness or anything that's happening. Like I don't need some AI bot to spit out a CSV that upload. Like I'll just go in and pull
actually I'm curious as like a D2C founder, like what does your day-to-day look like from this perspective? Like, are you like waking up looking at Shopify every single day and being like, this is what we're at for the day, like Amazon? Like I'm curious, like what does that look like, say for the first half of the day?
Yeah. I won't tell you what time I get up because you guys will probably be like, holy Lord. But I get up pretty early.
Is it like a 5 a.m. type of thing? Because Kyle's the same thing.
I think this morning was like a 3:45.
Oh God.
Yeah. Not by choice necessarily. But yeah, I get up and I spend probably the first 30 minutes updating all of our dashboards. So what do we spend across channels day before? How is that trending toward budget? How's that trending month over month? How's that trending in current month? I'll update all of our financials. So I'll go in like, where's cash position? Where's like all of these things, go along in all of our banks where we spend money on, blah, blah, blah. And that usually takes like a half hour, 45 minutes. But from there, I know I have like a crystal clear picture of what happened prior day and where we're kind of at from like a trend budgeting perspective, which just gives me like peace of mind to go through the rest of the day. Then I'll do email for a little bit. And then that's when I'll go kind of do a workout. Try and get to the office around 8:30 or 9. We all have time blocks from 9 to 11 where we don't have any internal meetings. It's just like, that's 2 hours to just like get stuff done. And then in the afternoon, we'll kind of have meetings or whatnot, but we try to be as infrequent with our meetings as possible.
For sure. That's interesting because I feel like people don't really talk about what they like. E-commerce firms don't talk about what they do day to day, and looking at those like analytics does make a big difference. And just knowing your numbers, like your CAC, your LTV, your
every
AOV,
day too,
ROAS every single day, even your cash level. Like people don't even think about that. It's like, oh, I'm looking at my Facebook metrics, but like, are you actually looking at the cash in the bank? But you actually have what you made, like your payouts, all this type of stuff. So I think that's like very smart across board. And just having a dashboard for it.
I had the same Google sheet that I was updating our metrics on that I started on January 18th of 2020. It's in the same sheet. So literally every day I've been updating since.
Oh, that's
then.
Also just like a massive Excel sheet at this point. That's crazy. Yeah. Honestly, it's smart though.
Yeah, I mean, look, like it kind of goes back to the piece where if you're an early stage founder, like you just have to know your numbers. You have to for external purposes, for fundraising purposes, for rallying the troops internally, right? It's like, hey, what are the goals that are being set and why? It's like, hey, we want to get to a contribution profit of X. We want to get to top line growth of Y. Well, if you're not tracking and giving people updates, how are they going to know how everything's trending, right? So it's really on you to kind of be not only the CEO, but CFO for, the first few years, probably the business.
For sure.
Yeah, it's funny. I was sitting next to John the other day and he was like talking to a client of his at the 3PL and they were like, I think there was a charge that was a little bit different from like 4 months ago. And I'm just thinking to myself, like, how are you going to find that something might have been a small problem 4 months later and like have a fully functioning, profitable, scalable business, Yeah,
that escapes me.
Yeah, literally. No, the craziest thing is that like especially when it's like your money or your investor's money, like you should want to know where the hell it's going. You know what I mean? Like
Totally.
you shouldn't be looking back 4 months like, oh, well, why didn't I cash this 4 months ago? It's like, no, like you're like, honestly, as a founder, most of your job is just like making sure the business stays afloat with cash. You know what I mean?
Yep.
Like that, it's all put in the right place. You know, like you make your right investments in the right place, and you kind of like work like that. You know, when people don't know how much money they have, that's like the real problem that people fall into. Yeah,
Totally.
Anyways.
Yeah, we'll wrap this up soon, but I had one more question because I know you, I don't know whether you pride yourself on it or not, but you have a lean team. And I think a lot of founders make the mistake of like way over hiring or maybe like subcontracting to agencies that aren't like super connected to the business. It's not like an in-house feel. I guess what's your take on like your hiring structure, and do you work with any outside contractors or agencies?
Work with a few. But my philosophy around team building and hiring structure was kind of informed through two different companies that I had exposure to. One was Bonobos, early days. Again, like was growing rapidly, hired a ton of people. And this wasn't necessarily reflective of Bonobos, but operated in a time where, again, success metrics were how much money have you raised? How big is the team? Right? Like not what does your P&L look like, but how big is the team? Conversely, when I moved to Chicago, I got to know the guys who ran our X bar really, really well. And they were super lean, like super lean. And the thought there was, we are always recruiting. And when the time is right, we will then have a Rolodex of people to say, we're hiring one. And these are the 5 people that I'm going to go after because they're really, really good. So I think it's a slippery slope between putting butts in seats, but like the right butts in seats in terms of like truly getting the best possible person you can to fill that role is extremely important for the first 10, let's call it. Saving $5,000 here by going to this and like that will catch up to you very, 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 very quickly. So my kind of mantra around hiring is we look for quite a while to make sure that we have a really, really, really good fit. And then I tell them, what tools and resources do you need? And then I'm going to get out of the way because that person doesn't need me looking over their shoulder. Like I basically then work for them, which is like, what do you need me to do to make sure that you can execute the job that you're here to do? So when we think about recruiting, it's oftentimes like, okay, let's look at the roadmap. Where do we feel like we need to build the team over the course of the next 6, 12 months, let's call it? Who is best in class at doing that? Growth, retention, like whatever it is. Go find a subset of brands that kind of meet that criteria, best in class of doing X, and figure out who's like third in command, right? So it's not like the VP of growth or it's not the senior director of growth, but maybe it's the growth manager that's been there for 2.5 years and is like actually executing, but is ready to say like, hey, I've been doing this for 2.5 years. And before I was 2 years at this place, like I have decent experience. Like, but here's what I would do differently if I had the baton to run now. And it's like, that's who we want. It's like hunger, passion, motivation, willingness to learn, but also has really great exposure to growing or executing at a brand that we kind of admire as a few stages ahead of us.
I think that's an awesome ending to this one. Hire great people, pretty much. You're saying pretty much hire great people, invest a lot of time into it, and like
get out of the way.
And get out of the way for sure. Yeah. Those are great tips, and like, no, for sure. Because like at the end of the day, if you're hiring them and you're paying them and you're trusting them, you should just let them do their thing. Like you shouldn't be the bottleneck in the way.
Exactly. That's exactly right. And then like, I mean, we executional wise, like we have touch bases with everyone once a week, right? And the first question I always ask is like, what was the biggest point of friction this week? Like where were you stuck, or what was annoying to you, or what? So like nothing festers inside. That's the last thing that you want to have happen, right? You have a really great talent who's seemingly fine, and then all of a sudden 3 months later is like, hey, I quit because like this has been bugging me for months and like we never discussed it or what. Like you have to get that stuff out into the open. So touch base is super important. Asking like the tough, like what's bothering you, like where did we fall short against goal? Just like getting those difficult conversations on the table so you can be very transparent in and around where we're sprinting towards from a goal and tactic perspective has just become super, super helpful for us.
Most definitely. Where can people find you if you want them to find you? I don't know if you want people bothering you.
Social media.
Yeah, I mean, Twitter is probably the best, I guess. It's just at Matt Mullenax. It's pretty easy. When you have a weird name, it makes it easier to get username. Yeah, exactly. That's probably the easiest.
Do you guys do any promo codes for Huron? Because if you do, we're going to get a New Money Talks one going. If you don't, it's all good. But if
NMT.
you do, we get one going.
We can. Yeah, we can.
We get like an NMT 10 going, NMT 15.
If one exists, it'll be in the description of this video.
Yeah, we'll throw it in the description of this one. No, but we appreciate you coming on, man. Like, you've been like, the brand's been around for a very long time, longer than a lot of brands that we see like in the whole D2C space. So you've been through the trenches, and we appreciate you coming on and sharing a lot of your story. Like, we learned a bunch, and I'm sure people listening learned a bunch too. So this is great.
Yeah, thank you for coming on.
Yeah, thank you guys for having me. Really appreciate it.
Yeah, and before we up on, quick shout out to one of our sponsors, MediaGlobe.io.
Gotta give the sponsor.
Personally, I've actually had a lot of friction with Facebook for certain products, whether it's like shapewear or whatever, that your ad account goes down, or you get spend limits on those new ad accounts, or you can't contact Facebook. I think everyone has that problem, unless you spend the amount of money that Huron has spent, then I'm sure you get your account executive. But if you don't have access to those resources, MediaGlobe.io, they're awesome to just be able to get access to like Facebook reps, unlimited spend, unlimited ad accounts, and the whole 9 yards. Are very good with it. So shout out MediaGlobe, and thank you, Matt, for coming on.
For sure. And if you've gotten to this point, we're up to like 3,100 subscribers, so this has been pretty cool. We're
growing.
We're growing every single month. So if you got to this point, make sure you comment, subscribe. Like, we appreciate it. Like, we've been doing this for 3-4 weeks at this point. Almost. We're getting to
73 according to my intro.
Yeah, exactly. 73 according to your intro. So yeah,
he knows his math.
Yeah. Matt's been in banking for years, so he knows what he's talking about. No, we appreciate it. Make sure you comment, share with a friend. Like, we've had a bunch of people reach out to us. We've even had guests who've been viewers of the pod be like, "Hey, I watched your pod. I want to come on because I want to share my story." So if you ever want to do that, hit us up. It'd be awesome to have you guys on. So thank you, Matt. Appreciate you, man.
Yeah, thank you.
See you guys on the next one.
Appreciate it.
All right. Have a good rest of your day.